Good weekend. Ira Epstein with your financial market wrap-up. And this wrap-up is for Sunday, and we're at the 3rd of April, 2022. It's about 1:45 p.m. Central Time. So as you can see, looking behind me, the markets had a basically red day on Friday. You know, the more you look at it, the more you see more markets were down than up, so that's important. Over the weekend, the calls for making Putin pay for war crimes just keeps increasing. I mean, if you look at the pictures, the response from Russia goes in, destroys towns, kills people, they're bound, they're shot in the mouth while they're bound, and they're being staged, and that Ukraine is staging it. They don't do those type of things. You can put it on video. The video pictures show the same thing, and what do they say? No, that's all staged, that's not our soldiers. So you see the argument going on. It'll be interesting today to see how Hungary's vote goes. They're going to stay pro-Russia, or they're going to break away from it. Going into the event, it still looked as though they were going to stay pro-Russia. We'll see just what comes out there. So as we take a look, remember what we do on the weekend. On the weekend, we look at one monthly chart, and then everything else is going to be the weekly chart. So I want to start off with the S&P 500. Why? For the month of April, if you go back 25 years, this is the most winning month in the S&P 500 index. Out of the past 25 years, 21 of those months have ended the month with gains. 4 have ended with losses. The biggest loss I found was 6%, by the way. So let's take a look. I write about all that in this evening's market report. If you get my full research, mine for my full subscription, you see that I write about all these and give you these statistics. In any case, what has really happened is the market for and this is a weekly chart. Let's start off monthly first. On the monthly chart, you can see how the month is staying up, and each month it's stayed up. You gained so far. It's only April 3rd, so there's not too many days of trading, 8.5%. More important, you haven't really returned to the 18-month moving average of closes since back in early 2020. So even these corrections have not carried the market down like that, and that's part of what the bulls are hanging their hat on. When you take a look at the weekly chart, and the reason I wanted to do this, you'd been down through the week of March 18th. Then the market on the week of the 25th got up, and the market just ended this week with the gain in the market staying up 0.6%, but the battleground is right here. Now, I've made an argument to you, and I'll stick with it. I don't see how the fundamentals warrant in this market going for contract highs. And if you're a longer-term trader and you're buying up here, what else is your goal but going for that? That's my point. As a trader, I have all types of other parts. But as a longer-term trader, one that uses weekly charts or longer time frames, that has to be your goal. Does that make sense is the question. When you come to the weekly bar chart, as a chartist, I don't give a damn the name or my thoughts. You got to go to the chart picture. An uptrend is defined as a market having higher lows and higher highs in its most simplistic form. We have that. We have a break low here, a higher low there, and the market's making higher highs. Bullish. I then look to see where the market is in relation to on a weekly chart, the weekly 18-week moving average of closes. You're over it. So the bias is up. If one were to buy here, where would you have a stop to break that pattern? It would have to be back under 41.38, so you are risking 400 points for that. Number one, the risk is insane. That's $2,000 a contract. I couldn't tell somebody to do something like that. Where's the profit objective? Well, it's not above the market if you use moving averages, as you have the 18-week, the 100, and the 200. So a logical number, or one of two parts. I don't show window envelopes here, but I do show Bollinger Bands. And the Bollinger Band would be a new high for the move at 48.14.5. That would be the target if one were buying here, looking for the market to continue to go up, and momentum's up. So, in all fairness to this market, the trend is up, the bias is up, momentum is up, the target is a new high at 48.14, 48.15. When you take a look at the Dow, a different picture. The trend is up in the sense that you got higher highs, higher lows, but the market refuses to close over the 18-week average 2 weeks in a row. It is paying attention to that as the resistance point. If one were buying here again, you'd be looking potentially, that's all I'm saying, at getting to the upper Bollinger Band that's been a target on recent rallies. You can see that. That would be a new or just about a new high as well in the market. And momentum up. So momentum up, bias down, trend up. When we come over to the NASDAQ, same thing like we just looked at. You have, or is it, by the way? It isn't. Remember, you've got a lower low, higher high. What this market did an excellent job of is as it was falling down, it again found its support against the 100-day average and the combination of the lower Bollinger Band. You only close under a Bollinger Band 5% of the time. It's normally a big support area. What can make it very bearish is when you latch onto it like you did here. I call that the gorilla glue trade. And you can see how the market was doing that, and suddenly you had a big reversal in this market on March 18th. If the market continues with that reversal, which never did embed, a logical resistance point would be the 18-week average of closes. The market makes its run, gets up there this week, and that's where it stalled out. Closed, in fact, under that. Is there anything here that throws out an immediate buy signal? Not unless the market were to make this week a lower low and then come back and close by Friday over this week's high and a higher close than that. That would do it for me. That would be an outside week up, or one of the definitions. I can vary that a few different ways. The Russell 2000, same thing. The trend here, so 3 of these 4 indices have higher lows, higher highs. They have held the combination nicely of the Bollinger Band in key moving averages, be it the 100 or the 200, and they've rallied in unison back to the 18-week average, and in one manner or the other, they're either stuck at it, slightly under it, and slightly above it. That is the thing you have to watch. Momentum up, trend up, bias up. Again, if you were to buy long at 2086, your stop has to be 1916.80, so it's a 170-point risk. I do want to take that much of a risk. In the 30-year bonds, I look for support against Bollinger Bands. I don't think markets, especially the bonds, like to extend themselves much beyond it. That is their history if you go back and study it. You can even come here to see what I'm saying. You can see here, you got over it until you discovered the 200-day average. Then the market started flip-flopping right back to it. So getting here, you have an outside week to the upside. What does that mean? The way that I teach outside weeks, if you were to take out this low, the objective is the Bollinger Band. You're already there, so I don't have another objective. If the market extends from here, it's possible it gets to that 18-week average to look for resistance. We'll see what it wants to do. The 10-year note, the same thing. You got to the Bollinger Band and you're riding it. So now you've locked in on it, driving it lower. The difference between the 30 and the 10-year is this market has what I call an embedded slow stochastic reading. I want you to look at this, not here, but this week, both numbers for the first time closed under 20. The next week, they close under 20. That's the week of March 25th. They close that week, the next week under it. So you've got 3 weeks in a row, and you've pulled back to get over the Bollinger Band, but you're staying right on it. You have a fully embedded reading. What does this mean to me? On a weekly chart, there's a moving average that I teach in my charting course that'll be here under the 18-week that I think the pros will sell at. They'll get out if the red line closes over 21, and if it doesn't, they'll keep riding the market lower. There's a way to take advantage of that in what I call my enhanced Bollinger Band course. If you want to find out about that, just move your cursor up here at any point. I'll put up there where you can get to the enhanced Bollinger Band course, making life easy for you, and you can read all about it and learn some things. In the dollar index, you're overbought. Now, I don't like to use as much in weekly charts overbought as oversold as I do on the dailies. I find that these markets can head up. So I've made a practice of just saying momentum's up, down, or embedded on the weekly. At this point, it's still pointing up. It's not embedded. You're at a resistance point. The market did get over the upper Bollinger Band, but I'm going to repeat, only 5% of the time you're going to stay over it. Therefore, it's pulling back. Now, traders will say, well, wait a minute. You say that, yet the market's still higher than it was there. I'm not saying you're wrong. I'm saying there's a better way if you're determined to be a buyer, to buy it than over that number. You can generally buy it better. Better's got a big definition to it. Higher lows, higher highs, overbought. I think the pros came out over here. I said that before. They've left money on the table. Generally speaking, the first challenge of an upper Bollinger Band is where professional money likes to come out. They'll hold part of the position if they're embedded. If they're not, I've learned over time that they generally come out. Euro's the flip-flop of that. If you take a look, the market had come down. It had got to the lower band, went back to the 18-week, went down there. I think the pros are coming out. I know you're going to tell me, well, then they've missed out on that part of the trade. Yeah, but not too bad, as you can see. And now you've got a pattern of higher lows, higher highs. Now, there's a huge argument going on within the European Central Bank as to what they're going to do and what traders expect them to do. Some think the bank has to get more aggressive and raise interest rates because inflation is so out of control. Even Germany this weekend is calling for the EU to consider a ban on natural gas. Germany gets 40% of its gas from Russia. A natural gas ban, in some manner, gas from Russia. Very bold move. They have really changed under Scholz from Merkel, a radical change. Higher lows, higher highs, resistance up here. So that's the question. I read this weekend detailed articles on why some people think that the bottom's 109 to 110, and another group thinks you're going to get down to the 105 area. Lots to digest in this. It all depends how they attack the higher rates and how they respond to the U.S., which is committed to 50-point basis hikes coming on this report, probably the one after it. In the Canadian dollar, you are trading between the lower and upper band. I'm going to repeat. First challenge of the lower band, I think the pros came out. First challenge of the upper band, I think they came out. This is a difficult chart right here. Japanese yen is still very bearish, but you have 4 weeks in a row under the lower Bollinger Band. It is rare. Go back and count. It is rare to exceed 5 weeks in a row. So now I think the market's on its borrowed time. It is trying. Now the word is trying. If you look at the numbers here, both numbers are not under 20. Week 1 of trying to get them both under 20. Week 2, not week 3 yet. Will they? If it embeds, rallies will be sales. If it doesn't, you're selling into an oversold condition. That becomes the issue. In any case, I think wherever that 18-week average ends up, traders will view that as a potential sell zone over time. Bitcoin, is this for real? It could be. And as such, until this market gets back under 37,180, this chart is bullish. Higher lows, higher highs. I look for support at the 43,375 level, and the target something between 50,000, 52,000. The bigger question is, was this the most recent area, this whole break here, proving it can't get back to the 100-week average of closes, and maybe that 30,000 number was it. Maybe that's another trading bottom. When we get to Brent WTI crude, you can see that the market got up just over here. Let me get to this. Last week, the 675 difference, that narrowed in rather sharply. That's a big move, but it still favors Brent. As long as you're over the 18-week moving average of closes, which is this number, the bias favors the Brent. When we come to the weekly chart, you have a pattern that is bullish in the sense that the swing line is up, but now you've got lower highs, higher lows. I don't like that. What else happened? When you had the embedded reading, you lost it this week, and that was March 11th. That puts into play, unless the market gets up and makes a new high right away, that the market is likely going to get down to the 18-week average of closes, and that is the move that I think is underway, trying to get there. The same in WTI crude. It had been embedded, you lost it. Wherever that 18-week average comes in, that's where I think the magnet of prices is. I think the same thing's going on in gasoline. So you put it all together, you try to come up with game plans, and that's it. Now, another part of the game plan for you is the research we put out, which is very different than what you're getting on the internet. And so many people go out for free. Let me see what this person says. Yeah, they do it. I go out on the internet and look at it. But it's not quite what we do. We write for commodity traders. So we're talking to you, what's the open interest doing? What are the spreads doing? What is the cash market? What do traders in the cash market think? What's going on in the future side? You put it all together in all these markets, we're talking it. Now, weather's going to be an important factor now as plantings are coming up. We have our own meteorologist on. We just didn't bring them. We have two of them we use. One's in-house. We've had this as long as I've been with Linn, so it's many, many years. How do you get a free trial to all this? You can either call my staff or just go to our website. On the left-hand side, you're going to see free offers. And remember, if you want to learn about the enhanced Bollinger Band course, it'll also take you to our website. Just click up here. Have a great weekend. I'm Ira Epstein.